All right, hey there guys, Sam here from TradeDevils-Indicators.com. All right, this is the first in a series of indicator spotlights, I think what we would probably call them that. We'll do this on a monthly basis, and we're going to start with the FootPrint indicator. Happens to be in conjunction with the promotion that we're doing right now, so I thought we'd use it here, some decent examples. And again, for whether you've made the investment into the FootPrint indicator, or you're considering a trial, or you're in the midst of a trial, there's some hidden features in here. Well, maybe not hidden, but if you don't know to look for them, you might miss them. So I thought I would just draw these to your attention here, and we'll as I always do, we'll just use the most recent week of data here. I never cherry pick data. I just always use the most recent data. So I'm recording this on Saturday the 13th. So here's the last 5 days of trading. You see, after all that volatility, we damn near end up right there in the middle of it, so make no progress. And as I always do, I have our initial balance indicator on here to kind of frame these days. I'm working with an RTH template here just to reduce the amount of scrolling we might do. I've got our toolbar up on top here because we'll use that here, and then of course I have the FootPrint indicator applied. Well, so along those lines, just to start out, because I think some people miss this. When I have the FootPrint indicator applied, I can condense the chart down to where I'm just working with a candlestick chart, right? So if I come do it this way, we look at Friday, the FootPrint indicator is applied, right? But if I'm working at this level of expansion of the chart, I guess for lack of a better way to say it, I've got a candlestick chart, right? So any analysis that I might be used to doing with a candlestick chart, I can do right here, right? With the FootPrint chart indicator applied. But if I wanted to, for whatever reason, I'm down here, it's Friday afternoon, and I'm seeing this bottoming action here, and I wanted to dig in a little deeper. Well, of course, I could just open this up, and now I'm going to start to see all of the information that I'm going to get from that FootPrint chart, right? So if we open this up, we look at it here. Now, I don't know that's necessarily how you would. I suppose if you were short on screen real estate, that might be an application. But note here, as we condense here, I'm going to lose the summary down below, and I'm going to have a candlestick chart right here. I want to bring this back. All right, now I've got it. Now this is the default setting, so some of the customization here, this is about as rudimentary as we can make it, where we have just a bid ask and candle in the middle, and then our POCs are emphasized here. There are some bar markers on this, which that's not really what this video is about. In fact, each of these bar markers here now has their own individual video, which you'll find on the web page for the FootPrint indicator. So we won't get into all of these. There are a couple things I wanted to draw to your attention. So let's condense back a little bit here, and we'll lose that FootPrint detail just for the purposes of showing you this. Okay, so here's the close on Friday. So what I want you to focus on here is this middle section here, and you get to it right from the drop down. Now I have a few things here highlighted here, which it's not really relevant to what we're going to showcase here. Now, as you're working with it, you'll notice here that these are all of the things, all those bar markers that we were just looking at, right? So these are all still on. I've left every single one of them on. But what I want to draw your attention to is not this, right? Well, again, there are individual videos on each one of these. What I want to draw your attention to is this middle section here. This is, again, if you don't know it's there, you can really miss some of the real benefit of this indicator. So there is some redundancy. So for example, fading momentum is here in addition to being a bar marker, right? So I've got fading momentum here as that kind of snowflake. So I can see it on the individual bar if it happens. Additionally, down here, we're giving you the capability to not only show it, but then extend it. It can be for a number of bars, or it can be until tested or until broken. So just to demonstrate this, as this is quite common, very common to highlight with any FootPrint indicator, to highlight stacked imbalances, right? It's a place of aggression where the market was very lopsided, buyers or sellers, whatever the case may be. So let's go ahead and let's just turn these on. Now I have it currently set to until broken. I could go until tested, or I could just go, okay, I want to only extend them for number of bars, right? As you can see here, 5 bars. So I can see that it's there. Well, this is an area, so here's a decent example. This is an area where I might want to, let's go until tested. I might want to extend that. So we see a nice example here. Now, one of the things that you'll notice with, it's not 100%, but you'll find this is relatively consistent. When we have stacked imbalances, they will often be at areas of imbalance, right? So it's said differently, we would end up with an imbalance here represented in the separation between highs and lows of alternating candles. So I get what's also known as a fair value gap here, right? So whatever you want to call it, what we have here is an imbalance, right? It's the imbalance between this low and this high. So thus, it's not surprising that often you'll see these stacked imbalances will be where we have this, again, not to overuse the word, where we have this imbalance in the market, right? Or a fair value gap is there. So these are things that are commonly looked for here. Oh, let's go back a day here. So here, the only one that's untested. Everything else, I mean, here there's many in here, but here's one when we got it to the tick. You see a couple of examples here where you say, well, okay, I kind of like the idea. Here, of course, right at the open, big imbalance. We come back, test it once, come back, test it twice. Here's a short one, short-lived, right? This is extending until tested, which is why it stops here, because it gets a little test, and then up we go. And, same thing as we go here. You'll find that these can be areas of interest. And note again, imbalance, right? So market, we don't pivot here, but note that we pause here. Not uncommon that there would potentially be some defense there. The market is that you can just see the absorption here. It's eating through those sell orders here, and off we go. So that's one that you are most likely familiar with, although you may not recognize that you have the capability to extend them. Let's get this off of here. If you wanted to. Well, all right, so that's one that you're likely quite familiar with here. We're going through Friday here. So let's go back here and go ahead and take that one off. A couple that I think you may not recognize here, but that can be quite useful, would be the value area and the POC. As a matter of fact, if I could only choose two events here that I could put on the chart, it would be these two. Right? These would be the most significant, because what do I have here? If I'm doing bar value area, let's go here, and just as before, I can extend for bars. I can extend until broken, right? We're not going to see a lot of them, or I can extend until tested. My suggestion when you're first starting out with these would go until tested, so your chart is not blasted with too many of them. So go until tested, so it'll stop, right? When it's tested, it'll stop, so you won't end up with hundreds of them. So let's go bar value. So let's just look at that as it is, right? So here, we see a couple of decent examples here. And so this should make sense to you as to why that would be a point of interest to the market, if we say it that way. Because what's the point of the market, right? To facilitate trade. Where are we going to facilitate trade? Where there's liquidity. So each one of these represents the liquidity within that candle, or the majority of the trading, right? So we'd say 68% of the trading the trading volume within that candle is happening in the value area. So we're getting a little more precision, much like if we were looking at the value area of a traditional volume profile. We're looking at the whole day, that we'd have our value areas marked out in the high and low. Those often can be pivot points, as the market will seek to stay within that value area, right? That's where everybody's fat and happy doing business. When we get outside of the value area, then clearly one side is dominating the other. So these can be really valuable here, and we see some decent examples here of these extending until they're tested. So the market, you can kind of envision, how these could be. Here, do we come back to this? I think we do, right? So we come back to some of these. So I have a big, wide right side margin, so we can do just this. We can kind of look as the market moves through it. So the additional advantage here is that if I've got a value area, it's a high probability that the POC is close by. Not always going to be right in the middle of it, but that would not be uncommon. So in addition to extending the value area, I want to extend the POC. So same thing, I have the choice of bars until broken or until tested. Much as before, I would encourage you to go until tested. So now we see here, again, it's not always right smack dab in the middle of the value area here, but we can see that we have some POCs here that are prominent. So understanding the point of control being where we see the most volume being traded within that candle, these can be liquidity magnets, and the market will often return to them, or when it gets to them, there will be some consolidation as the market has to process the fact that there's a lot of resting liquidity there, and thus much it's almost like looking at an order book. We can see where there was high volume that was traded within that candle. So the market coming back to it can be support, can be resistance, or can be part of the story. If the market just blows right through it, well, then you know you've got some dynamic force in the market that's pushing it one way or the other, right? And volume is eating right through an area that might be a point of consolidation. So this can be really useful, and much like the others, I would encourage you to go through these and start doing a little back testing. You can do it just like I have it, where I've got the right side pushed out to 900, right? So no, I think the default is 8 to 10, right, on your right side edge. Just put it out to 900, so you can go through it just like this, almost like a bar replay, right? So you can just look. I mean, okay, right? I mean, pretty nice example here. It's not that I'm trying to suggest that every time you see one of these that you take action, but it's part of the story. If the market is returning to these locations here where we have an extended POC that's been untested, it might, again, you could look here, consolidation, here's to the tick, little consolidation, here's to the tick, here's to the tick, we blow right through here, although we have this consolidation. These are liquidity magnets to the market. Now we start to open it up and combine some of this, and you look here and you say, okay, well, this can offer me some additional value here that would be meaningful to me. So if let's come back earlier in the week here, so we're not just focused on Friday. Well, I mean, here's a decent example. This is early afternoon on Thursday, where we have POCs and value areas that are extending here, and it's not hard to see how this was resistance to the market. So in addition to coming back to this value area and to this POC, now I start to see some fading momentum. Right, I've got some sequencing here. I mean, this is, an area in the context of the market always kind of talking to us, and we're trying to read the market through getting inside the candles. Well, there's 18 ticks coming out of that. And you'll note here as we're heading down here, what's interesting, right? So with these, even as we're going through this big drop here, you know that the value areas are not extending because they're being tested, right? So when they are untested, pay attention, I guess is what I'm saying, right? This can be a value add, and I wouldn't want you to miss it, because when you turn this on, these will be off, right? And I don't want you to miss it, right? So you might get it like this and say, oh, okay, well, this is cool. It looks like a lot of other footprint charts that I've seen, and there is so much horsepower in here, and the ability to customize this to look and trade in just about any way you can think of. I don't want you to miss these. So I would encourage you to go through these one at a time. Say, okay, stacked imbalances, we looked at that one. Inverse imbalances, that's rare. So that might be the kind of thing that you would turn on and you would want to extend until tested, because they're quite rare. So if you see one, I mean, I think in the entire week there was one, maybe one. Oh, here's one right at the top, right? So I have which is where you'd likely find it at a pivot high or a low, right, where we have an inverse imbalance. I'd encourage you to go through these. But now, the reason I say that is you want to be selective, because you can create paralysis of analysis with yourself if you're not careful with a footprint indicator, because there can be so many signals you can't make heads or tails of it. So here's the inverse again. All right, again, these are uncommon. So something, for example, like delta divergence, right? I'm just kind of wrap on this point. If you start putting on things like delta divergence, and we're going to put on tails and stripes and delta rise here, you start putting too much on, you can start to really lose track of what's happening here, because you've got here. If we go to a section like this, you're going to have too many signals, right? It's too much information. Choose two or three that make sense to you, again, that you're drawn to, you understand why you would want to participate, you like the potential risk reward. Be careful about getting too much on here, because now if we go back and we start extending all of these things, this can get a little messy. Let's go tested. Let's do bar value areas. Let's go until tested. Let's put some here we'll put stacked imbalances on. right? Now, you start adding a whole bunch of vertical stripes, and you can get yourself to the point where you got too much information, right? It's too much, right? Too much. Is there a clear decision to be made here? Maybe yes, maybe no. I just caution you to getting paralysis of analysis, because you've got signals on every bar, and every bar is not trade worthy, right? I think we could probably agree to that. Oh, let's see, where am I? Late in the day. So, I mean, I'm not saying there's a right way or a wrong way. I'm just cautioning you, because we can identify so many different events, particularly on a 1 minute. I'd caution you to putting too much on the chart. Focus in on a few, make those your specialty, if you will. And when you've got those really clear and mastered, and you can identify them, and perhaps you don't even need to highlight them with a stripe. Maybe down here, just the delta surge is enough. Just the letter S, to where you start to focus in on, so what is this, whatever is on the chart, I want it to be the most important element that I'm looking for to make a trading decision. So as I've said, if I could only pick two, these are the two that I would use, right? But of course, we don't have that limitation. So I encourage you to do a little testing, right? That's one of the values of having 7 days to work with this. See which one of these really start to stand out for you. And again, perhaps you want to see them marked on the bar marker, like stopping volume or fading momentum. You don't necessarily want to extend those. Maybe you do. Again, no right, wrong answer. Just a lot of flexibility and customization based on your trading preferences and the information you'd like to see on your chart. All right, with that, I'll wrap it up here. Just a reminder, we've got this promotion going on over the Mother's Day weekend. So this will go until Sunday night, but we'll continue in this series. Well, it'll likely be a couple more before the end of the month, again, focused on the footprint chart, and then we'll rotate to something different next month. Okay, guys, with that, I'll wish you good trading.